All right, thanks for having me here. I'm going to go a little bit off topic listening to Rick Rule, and I started thinking as I was listening to Rick Rule in the history, why do I like Galantas? And I'm sure there's going to be a lot of CEOs here in our industry that are going to be pretty pissed off at me right now, but I think we've actually fallen in the trap of money printing. And if you look at the history of the projects I got involved with, it was Ivernia, it was a low capex project. We had a lead mine in Western Australia. I was CFO of Lakeshore Gold. We started small. It got sold for $1.7 billion. I'm the executive chairman of Doré Copper. We came out with a PA. It's about 160, 180 million Canadian. Again, starting small, manageable capex. Galantas Gold is ready to go in production at the end of June. And I think as an industry, though, I'm completely off topic, but as an industry, we've fallen in the trap of money printing. And what I mean by that is if you look at a lot of the gold projects, base metal projects, any project, they're now 3, 4, 5, $1 billion plus capex. And the reality is a junior could find those kind of projects, but you can never really build them anymore. So if you go back to the 80s and when the heyday of maybe the gold exploration companies, we were looking for high-grade projects, good projects, trying to get them into production, small scale, keep the capital structure tight so that when the cycle turns, that's how you gain your leverage. Look at Agnico Eagle, one of the best gold companies in the world, just bought Kirkland Lake Gold, but they started small. And the reason why I know that is because in our camp in Quebec with Doré Copper and Chibougamau camp, that was the same kind of issue. It was the biggest gold camp, biggest copper camp in Quebec and in some respects in parts of Canada. But then the company back then started focusing outside, looking for the big, massive finds. Well, Galantas Gold, now getting on topic with Galantas Gold, what I really like about Galantas and what caught my attention with Galantas is it is a former producing mine. We produced about 30,000 ounces open pit. We were going into underground development, and we are next to Dalridian Gold. And Dalridian, for those of you who don't know Dalridian, it's a 13 million ounce deposit in Northern Ireland. It got sold in 2018 for about 550 million Canadian to Orion. They took a completely different path. They were successful, but they took a completely different path, and they're still waiting for permitting. And we think they're going to get their permit, which I think will be fantastic for the industry overall, because it is a world-class asset, 13 grams and 6 million ounces. But Galantas took a slightly different path, and the issue with Galantas, again, was that mentality from investors looking for that world-class asset on day one. I think Galantas has got a potential world-class asset, but we focused on getting the asset into production. And the former CEO did a great job. It's fully permitted. We're producing a concentrate by the end of June. It'll get shipped out into Europe to get processed into by the various smelters. But Galantas had trouble raising money because they focused on getting into production, 500,000 ounces at over 7 grams, but they couldn't raise money because everyone was looking for that world-class asset. Well, now that we're in production, we got less than 100 million shares outstanding. We're hitting some of the best holes we ever have. There's probably no reason why we're not different than another Dalridian, but now anyone who invests in Galantas is really going to get the leverage of this gold find at Galantas. And I know I've cut a lot of my time now in terms of my presentation, but I really want to stress the importance of not falling in the trap of juniors trying to find these billion-dollar capex projects, or even 400 million. You've seen many companies blow up recently with CEOs resigning because $300 million capex projects are now $1 billion capex projects. That's the environment we're in, and we fall into that trap. Well, I don't think we're going to fall in that trap with Galantas. So I'm going to jump ahead of a few slides. So we have about 500,000 ounces of gold, over 7 grams. Those are identified in 2 veins, Joshua and Kearney. Kearney was only drilled to about 300 meter depth, that's the deepest hole. Joshua to about 170 meters depth. That resource is from 2014, and the former CEO did a fantastic job. He said, I got enough ounces to get this into production, old school style. The market didn't appreciate it, but they are today, because we don't need the capex everyone else is going to need. So we've been drilling since that resource update, and I'll give you some of the nice drill results. But before I get there, the reason why I think this is a world-class asset, Queensway, which is Newfound Gold's project, great project. Eric Sprott, who's an investor in our company as well, you'll understand why. He's recently said that Queensway project may be one of the biggest finds in Canada. They got a $1.3 billion market cap, hitting some great results. But when Queensway went public, they used Dalradian in our belt in Northern Ireland to explain why they think they have a world-class asset. Well, Dalradian's already proven they have a world-class asset. We're right next to Dalradian, 20 kilometers away. Fantastic drill results, but yet we're trading at a $40 to $45 million market cap, sometimes better drill results, but we're not turning 100,000 meters a day. I'm not raising $50 million every 6 months because I'm trying to keep my capital structure as tight as possible. I've raised a lot of money when I was CFO of Lakeshore, over $800 million. You can raise money when the world is going your way, but when it's not, that's when mining companies fall into deep trouble. And Lakeshore had that same issue at one point because when the market turned after the financial crisis and we needed to upgrade our mill, finding money is extraordinarily difficult. So I think we're on the right on the key trend. I think we have potential for a lot more ounces. And you can see now where the Joshua and the Kearney vein is on this image. This trend now is over 3.5 kilometers. We know there's gold all along this trend. Rio Tinto worked this in the 80s. They identified a number of targets, but back in the 80s, the world was different. They were looking, again, for base metals, and it didn't meet their criteria in the 80s. But today, we think this is potentially a fantastic project. And the reason why I think we have something pretty special here is when Rio Tinto drilled, for example, the Kearney vein, we now have, as I said, about 200,000 ounces at the Kearney vein. To the north of Kearney, there was about 30 grams showing on surface drilling. They didn't drill deep enough to get into the Covenant member unit, and we know this is the key unit for finding high-grade gold because John Arthurs, who is really the forefather of the Dalradian rocks that Newfound Gold used to try and explain their project, he was the one that realized you got to drill deeper. Anytime you drill to find high-grade gold on this belt between ourselves and Dalradian, you have to hit that unit. So we still haven't even tested that 30-gram anomaly that's just to the north because we're still focused on getting ourselves into production. And what I mean by why I think I got something pretty special here, so since that resource has been issued, we realized in our ground that we have what we call dilation zones, where there's these cross faults open up the ground for additional fluids to come up. At the last hole drilled in 2016, not including the resource, was 20 meters of 10 grams. Since then, I've drilled 7 meters of 31 grams, over 2 meters of 71 grams. On Monday, released another result, 2 meters of 21 grams, 2.4 meters of 21 grams. We drilled 13 meters of 17 grams, another 2 meters. We've been finding multiple parallel veins, which shouldn't surprise anyone, because if you look at Dalradian, their 6 million ounces is within 26 veins. They're probably up to 9 million ounces. I'm sure they're well over 30 veins. We've really only focused on 2 veins, but we're finding more of these parallel veins as we move along. You can see what's quite different about ourselves is some of these parallel veins. We're in this lead, massive sulfide kind of structure. We don't get any visible gold. This is not nuggety. If we see massive sulfides, even though this is an orogenic quartz-style vein deposit, if we see that, we know we got grade. I don't have to drill it theoretically. I want to know what the grade is. But if we're seeing that underground for mining, we know it's going to be good grades. It could be 7 grams, could be 10 grams, could be 30 or 40 or 70 grams like we've hit. But we know that's ore. And I'm not going to go into these structures because I'm only down to a minute. One of the key differences now that for Galantas is when we got involved about a year ago, we brought in Eric Sprott, we brought in Mike Gentile, as well as some additional high-profile investors, and they all believe on this belt, but we brought in a real operating team that knows how to operate in Northern Ireland, knows how to operate on the island of Ireland. So Brendan Morris worked at Lachine, Alan Buckley was an operator, he's our CFO, worked at Lachine, Joe Burke is the geotechnical expert for Northern Ireland, Ian Wallace, I mean, this guy's done a tremendous job in a difficult environment trying to get this mine refurbished and rehabilitated, and he's done a great job. And then on our advisory board, you can see we've got a Tier 1 advisory board. For those of you that know me, Tony McCooch and I work together, obviously at Lakeshore Gold, and we continue to work together on various projects. John Arthurs, who is our geologist and advisor, Tim Warman, who worked at Dalradian, and Ernie Mass, he and I worked together at Doré Copper. And then in terms of our capital structure, I mean, what can I say? We've got 83 million shares outstanding. You know, if we move up this value chain towards a newfound gold without blowing up our capital structure, if we get to that $500 million or $1 billion ounce, which I think we have real potential to go to, it's not by blowing our share structure, it's by the value of the shares going up. I want to keep this as tight as possible. That's it. I'm out of time.